Welcome everyone to this lecture on Forex charts. Now, in the previous lecture, we looked at base and quote currencies, and the Forex chart that I showed you were predominantly line charts. And in this video and the next video, I'll be going through bar charts, candlestick charts, and also Heikin Ashi charts, and showing the differences and similarities between them. But let me go through line charts today, a bit more information about line charts and then bar charts. So yeah, let's get started. So if you look at this figure here, this is a 2-on-2 trading app for Australian dollar against the New Zealand dollar. And what I'm going to do here is I'm going to zoom in, and as you can see, there are little vertices. These are little lumps, and each of these vertices represents the closing prices. And you must be thinking, what is the closing prices? Well, let's say for example, the price of a currency at 5 p.m. is a certain value, and then the currency at 5:01 is a certain value, and then at 5:02 is a certain value. 5:01 on this chart is shown as a vertex, and 5:02 is shown as another vertex, and all they've done is join the vertices together. And if you look on the tab at the top, you'll see that there is a time frame which I've just circled in black, and it says 1M, 5M, 10M. This represents 1 minute, 5 minutes, then it goes to 1 hour, 1 day, and even 1 week. And right now we're on the 1 minute time frame. So that means that each vertex represents 1 minute. But if we chose the 1 hour time frame, that would mean that each vertex that I was talking about previously would represent 1 hour. So it would be the closing price at 5 p.m., 6 p.m., 7 p.m., as opposed to 5:01, 5:02, 5:03. And I hope you understand where I'm coming from there. And this is the line chart, and as you can see, you can observe trends. And I've just highlighted, I just circled a sort of trend that you can observe very clearly. You can observe a downward trend, and this is primarily what line charts are used for, to observe trends without a cluttered view, without having any other information apart from the closing prices, because that's what's most important, which is the closing prices. So let's move on to another example on MetaTrader 4. It's still a line chart, and this is, if you look on the bottom left, it says M1, and I'm just circled it in black, and this represents 1 minute. So this is the same as the top chart. So this represents 1 minute, and I'm just going to draw a vertical line here, and this is at 12:06. And the next line I'm going to draw is at 12:07, 12:08, 12:09, and 10 past 12. So I've just basically drawn a line from each vertex to the bottom. And just to show you that each of these represents 1 minute. So 1 minute, 1 minute, 1 minute, 1 minute. And in the last line that I've drawn, it shows that 12:10. So that's just proof that each vertex represents 1 minute. Now, what if I change the time frame to 1 hour? So if you look at this new figure, on the bottom left, you can see it says H1. So that represents 1 hour period. So I'm going to draw a red vertical line again, like in the previous one, but this is at 12 a.m. As you can see at the bottom, it says 27th August 0000, which is at 12 a.m. And then I'm going to draw another one and this represents at 1 a.m., 2 a.m., 3 a.m., and 4 a.m. And this is verified by the bottom when it says 27th August, 4 a.m. So that means that each of these vertices do not represent 1 minute anymore, but they represent 1 hour. So I hope you've understood this concept now of time frame. Is very important actually, because sometimes you can look at a graph on a minute time frame, and you can derive, oh, look, there's a trend. But when you go to the hourly time frame, you can see that it's the opposite trend or a different trend. So that's why it's very important as well as a trader to know about time frames. And a lot of traders, or most traders, trade around the day time frame. And when they want to execute their trades, they will move to, for example, the 5 minute trades or 15-minute trades. And just to summarize a line chart, so a line chart has a clear vision, gives a clear visualization for the trader, and it really represents only the closing prices. And for this reason, it's very simple. It gives an uncluttered view, so it doesn't provide any other information. So this is best in observing trends. So when you're a trader and only want to observe trends, because this chart is mainly for beginner traders who just want to observe trends, and this is perfect for them. One thing, though, which is the main thing, is that for some traders who want to derive or deduce a lot of information from a chart, this wouldn't be ideal for them because it only shows the closing prices. So for some technical traders, it might not provide enough information for them, and it might not give them the strategies that they want to deduce from them. For example, in the bar chart that we show next, it shows a lot more information and it gives a lot more information to the technical trader. And yeah, so we're going to move on to the bar chart. So let me show you an example of a bar chart. So here is an example. In this figure, this is the euro against the USD. The same app, 212 Trading. I just changed the chart type, and as you can see, there are some bars that are red and some bars that are green. The red bars are obviously the bearish bars, and the green bars are the bullish bars. But what do these lines mean? I mean, there's one vertical line and two horizontal, small horizontal lines that are emanating from them. So what do they mean? So I'm going to show you what they mean. So I'm just going to draw the bearish bar right now. And the top part is known as the high. So let's say this bar represents 1 hour period. So in the hour, the highest that the currency rate reaches is known as the high, and the lowest that the currency rate reaches is known as the low. And the open is known as the initial currency price. So let's say at 5 p.m. the currency was a certain value. That would be the open currency rate. And the close is after the hour, what is the currency rate? So let's say at 6 p.m. the currency rate at that time, or 5:59. And so this is known as a bearish bar or a bear. And I'm going to draw the bullish bar right now, and I'm going to show you that the high is exactly the same and the low is exactly the same in the exact same place, but the open and close price are different. So now the open price is at the bottom and the close price is at the top. So when the close price is above the open price, that's a bullish bar, so it's increasing. So it starts up low and it goes up high. When the close price is below it, it means that it's decreasing because it starts up high and it goes down low. So let's say, for example, this is in 5 minutes, and it could be in 10 minutes, in an hour period or a day period, and this is a bullish chart. So it can have different time periods, and I'm going to show you an example of a 1 day period because the figure that I showed you initially was a 1 day period per bar. So let's say in a day, for example, in 1 day, the day starts at 12 a.m. and let's say the currency rate is at X. Let's call it X. We don't know, but it's called X. And at 8 a.m., it decreases by 1. So it's X minus 1 at 8 a.m. And at 4 p.m., it shoots up to X plus 2. So it's really increased now by 3. And then at 7 p.m., it drops all the way down to X minus 5. And finally, before the day ends at 12 a.m., it's at X minus 4. Now, what does this mean? Well, the X is the open price, so that's at the start of the day. And the x plus 2 is known as the high at 4 p.m. because it's the highest value that the currency has reached during that day period. And then it shoots all the way down to x minus 5. So that's the lowest that the currency rate has reached during that day. And then finally, before the day ends, it increases up to x minus 4. So that's the close price. And because the currency rate opens at x and then ends at x minus 4, this is a decrease. So this is a bearish bar because it's decreasing. And now let me show you an example of an hourly period. So let's say the hour starts at 4 p.m. and it's at x, okay? And at 4:20, the currency drops down to x minus 1. And then at 4:40, shoots all the way up to x plus 5. And then at 5 p.m. or before the hour ends, it drops down to x plus 5. Now, it starts at x, so that's the open price. Then it drops down to its low at x minus 1, so that's the lowest that it's reached during the hour. Then it shoots all the way up to x plus 6, so that's the highest that it's reached. And then it drops down to x plus 5, so that's the close price because that's at 5 p.m. or when the hour has ended. And because there's an increase because it starts at x and it closes at x plus 5, that's an increase, so that's a bullish bar. And so I really hope you understand that example. So and really that should be in green because it's a bullish bar. And let's move on to the chart on MetaTrader 4. So here is a chart for MetaTrader 4, and this is an hourly chart. And as you can see, there's no colors, so there's no red or green, so you can't instantly see which one is the bullish bar and which one is the bearish bar. But what you can see is you can figure it out for yourself which one is the bearish and the bullish from what I've told you. So let's look at this one, for example, that I've just circled. I've circled the open price of one of the bars, and I've circled the close price. And now because the close price is below the open price, we know that is going to be a bearish bar. And let's take this example. So here is the open price for this one, and the close price is here. So it starts off lower than it actually closes. So that's a bullish bar. And let me take one more example. So here it is. This is an open price, and this is the close price. And because of that, this is the bullish bar. So I hope you really have a good grasp now and understanding of bearish and bullish bars. Now, just to summarize a bar chart. So the first thing I'd like to say is that it shows more information than a line chart. So because the line chart only showed the closing price, but this shows the high, the low, the open, and the close. So it gives more information for a trader. And as you saw in the chart above that I just showed you, it does show some trend, but not as clear as the line chart because it has lots of different information, and it's not as easy to see a trend as the line chart. And so those who just want to look at trends might not use this bar chart, but those who want to use strategies. So this moves on to our next point, that more strategies can be used. So you can see, I will show you in the next bar chart, which is very similar. Not the bar chart, the next chart, that the candlestick charts, that a lot of patterns can be derived from them, and a lot of patterns can be derived from this chart as well. So this is an example of a bar chart. This is an example that I'm going to show you on 2on2 Trading app. And I just want to show you the movement of the currency rate and how it affects the structure of the bar. So let's look at the top right, the bar that's on the far right, and let's have a look at it. So time is progressing, and now the minute has ended because this is a minute chart, just to show you what happens in a minute. So now the opening price is at 1.16292 if you look on the right, and it's dropped down, but the open price is 1.16292. Then it starts to fluctuate, so it is fluctuating. It goes up now to 1.16296. And then what happens? Well, then it moves down, and it moves down really fast. Let's go back there. So it moves down to 1.16286. So now that's the new low. And then it moves up, and then it stays in the middle. Then what happens? Well, now it shoots up. It shoots up to 1.16301. So now that's the new high. And then it carries on going up high, high, and then it even reaches 1.16323. So now that's the new high, and after the minute's about to end, it drops down to 1.16322. So that's how it actually works. So that's the end of that bar, and I hope it's given you some indication of how it works. So I hope this lecture has given you more understanding of line charts and bar charts, and if you understand bar charts very well, then understanding candlestick charts is going to be very easy for you. And if you understand candlestick charts, then Heikin and Ashley charts are much easier to understand. And thank you for watching. I hope to see you in the next video.